Hi, welcome to another beautiful day with us. Before moving to the topic, we would like to thank all our subscribers and viewers for their love and support towards us. A big thanks to you all who have appreciated our efforts in the comment box. May this new year 2022 bring happiness, new goals, and blessings to you and your family. As you all are eagerly waiting for a new content on stock market investing, we'll give you information regarding technical analysis of stock market. As this is a widely discussed subject, we have splitted this topic into three parts where we will be discussing the part 1 of technical analysis. Technical analysis is a skill which is a must for a trader, and also investor also can use this to understand the trend of the stock market. We can define technical analysis as a tool which helps to understand the market movement by studying the historical patterns already created in the stock market. The basics of technical analysis was founded by the famous journalist Charles Dow of the Wall Street Journal. The chart patterns and the technical indicators are the two main forms which are used in technical analysis. Let's look into some examples of chart patterns as well as some indicators. As you can see in the screen, the left side chart, there is a line drawn according to the price movements of the market. This line is called trend line, which we have made assumption through the chart pattern. Another chart in the right side, you can see a chart pattern which is called head and shoulder, which in nature shows us that the market in coming days will be going towards a bearish moment. There are limitless chart patterns are available for us to analyze, but we will discuss on the important most common chart patterns which repeatedly occur in the stock market. We will discuss about the chart patterns in detail in our next part of the video, and the third part of the video will consist of technical indicators. In order to make profit from your investments or from the trades, you will have to predict the stock market movements. You can make use of the TradingView website to analyze the technical analysis of a stock, which is completely free of cost. We have provided the link in the description, because only then, once you analyze the stock through a technical analysis process, you will be able to find an entry to the stock and exit plan as well. You can backtest your strategies or technical analysis in the TradingView website as well, or there are so many websites available in the internet today. You can make use of those real-time backtesting strategies. Along with the technical analysis, it is also recommended to develop skills like risk management, money management, and mindset. Why technical analysis is important? Traders around the world use technical analysis as a tool to identify the market movements. Also, the technical analysis helps you to identify short-term trading opportunities that can give you consistent profits. Even if it is small, the frequent short-term trades will help you to increase your profit margin, and most importantly, to identify the entry and exit point of a trade. This could sound like a very simple strategy, but it is not. This is where the trading discipline comes into effect, because once you learn a skill of technical analysis, applying this in the real trades is very difficult. Let's look into the trading disciplines in detail, as we understood that it is the most important factor in short-term trading. And execute the trade with the discipline, you can become a successful trader in no time. We should not identify long-term trades based on technical analysis. Technical analysis based short-term trades can last from just a minute to few weeks, that's all. If you are a long-term investor, please use fundamental analysis to make your investments. Do not expect huge returns from the short trades. Always stick to your exit point when your target is met or your stop loss is hit. No technical analysis in stock market is 100% accurate. So keep in mind, when your trade starts making losses, do not hold on to those stocks with the hope that it will get recovered. There is always an opportunity available in stock market. Cut your losses and move on to another trading opportunity. Do not fall in FOMO, which is also means fear of missing out. So that's it from us. We have covered most of the important points in this video on technical analysis introduction. We will come up with the second part of this video with chart patterns, where you will learn various chart patterns which you can identify in the stock market and find an opportunity to trade. If you like our video, please do subscribe, share it with your friends, and do let us know in the comment box if you have any queries or requests. Thank you for watching our video. Also, you can go to our channel and visit our playlist. Check out our other videos on stock market basics.